Morning, everybody. How are we doing? Morning, Wojtek. Morning, Danny. Morning, Peter. Morning, Evil. Morning, Soul. Morning, Chris. Morning, Mark. Let's see what madness this week brings, Ryan. Yes. Be a big one. Well, I don't know if it will be a big one. We've had it all, haven't we? Trump's really... Trump's basically had to back down because he was totally wrong. Everybody knew it, and for some reason he didn't. And now he seems to have backed down almost completely. So, stock markets today... I suspect, well, I mean, the DAX and the FTSE don't look like they want to go long, do they? But the announcement this week was that he's going to he's removing electronics from those tariffs. So basically, Nvidia, Apple, all that lot, NASDAQ should rise today. In theory, because they're unaffected by the tariffs, so their share prices should go up. So we should see a recovery in the NAS today, which means maybe back to long only. So yeah, back to the way it used to be. But then again, he can change his mind tomorrow and do it the other way, can't he? Anyway, so yeah, we'll see what happens. Morning, FTNet. Morning, Mumo. Morning, Marco. Looking at the opening ranges today, obviously markets just opened. We've got 2 minutes left on the 5-minute candle. Quite a big downward movement on the FTSE and DAX rather, and the FTSE's trying as well. Friday was okay, not too bad. A bit of a choppy day Friday. So the account was up in the morning, then went into a little bit of drawdown in the afternoon, back to a quarter kind of break-even point, and then we had some long breaks late afternoon, which brought the bacon home. So a bit of a mixed day on Friday, but yeah, up. So yeah, good week overall last week. So let's see how we get on this week. We got 1.5 minutes left on the open. Not a lot of volume today. Quite a big spread as well today. Quite often when we got low volume, we get obviously wide spreads because there's a lot more fluctuation in price, basically trying to get orders filled. So it's a bit jumpy today, but we'll see where we go. So just quickly before we look at the open, going to look at the news. Weekend news, not a lot came out over the weekend. Well, there obviously was a lot, but nothing new. No tariff exemption announced on Friday. As I said, the basis is this weekend that the electronics industry, or chip manufacturers mainly, are going to be exempt from the China tariffs. So not only has he dropped tariffs everywhere for 90 days and gone completely back, U-turn on what he said he was going to do, he's basically left all those China tariffs on, increased those China tariffs. But now the main thing that they get from China, which is the chips, he's made exempt. So basically the tariffs are bloody useless. So the whole thing he's done over the last 2 weeks by destroying the economy of the planet basically is a waste of time, because he was totally wrong. He's admitted it and backtracked. He's lied constantly about it. He's manipulated the market. His mates have made billions out of the stock market pump and dump, which is basically what this was. So yeah, the criminals got richer. So there you go. That's it. So that's basically what's happened. So we're kind of back to square one now. I wouldn't be surprised if the China tariffs don't get completely wiped off this week, because they're pointless. So we'll see what happens. But yeah, back to square one basically. So round two, ding ding. We'll have to just wait and see what he does this week. But anyway, looking at the week's news, so 5-minute opening ranges are in. Too small today, so there's not enough volume today. There's really, really low volume today. Don't want to trade in low volume. So we'll see if it picks up. You can see how quick jerky it is today. It's really, it's jumping from price point to price point. There's not enough volume in the market today. So we'll wait and see if we get some bigger ranges coming in the first 15 minutes, but might be worth sitting out today. So news this week. I'm only here today and Wednesday this week. Friday is a bank holiday in the UK. And so is Monday. I'm not here next Monday either. So I've got a lovely long weekend. So last stream is on Wednesday, and then I'm streaming again the following Wednesday. So I get a whole week off, which is lovely. Yeah, so bank holidays obviously coming up with Easter weekend this weekend. So this week's news, FOMC, we got Waller speaking today later on, but that's it today. So there's no news today. Claimant count change tomorrow for the pound. Not sure how much impact that will have at the moment, but we'll wait and see. First main news tomorrow afternoon is the CAD CPI. So again, now the tariffs are starting to get dropped a little bit, we might see news starting to play a little bit more into manipulation of the markets, but we'll see. We've got the CPI for the pound on Wednesday as well. That is forecast to come down. CPI for the Canadian is forecast to come down as well. But obviously inflation, if these tariffs do kick off again, is going to go up everywhere. Everybody's still got tariffs, so don't forget. So the tariffs are still there. We've still got 10%. It is still more expensive to deal with America. So these CPI figures are likely to increase. So I'm not sure how much attention the market's going to pay to them at the minute, because we're not interested in what happened last year or last month. We're interested in what the hell is he doing next. So difficult to tell how much impact fundamentals are going to have at the minute. We've got retail sales for the US. I guess this is last month's figures, so they could well be up, but don't think they're going to continue that way. Wednesday, we've got the rates for Canada. They are freezing rates. That was expected. Probably still going to happen. So we need to be paying attention to that. The press conference is where we find out what the guidance is going to be moving forward. But I'm pretty sure in that press conference, they're just going to say the same thing. We'll have to wait and see what Trump does. Powell is also speaking as well. We've got CPI for the New Zealand dollar. We've got unemployment for the Aussie. We've got the European rates, which are still dropping. Lagarde might make a change on that with what's going on with these tariffs. Don't forget they were threatened with very big tariffs, and they had a big tariff bomb ready to retaliate with. Didn't need to launch it because he backed down because he couldn't win. So we'll see. We've got that press conference coming in after that as well. And then Friday is obviously bank holiday, so there's no news. So it's a busy week this week. CPI numbers, interest rates. On a normal week, we would expect a lot of volatility, a lot of movement off of this, but not necessarily this week. So we'll see what happens. 10-minute ranges are just about to go in the next 40 seconds. Still not sure that's going to be big enough. I'm using ADR 10 still. So we'll see. That's definitely not going to get a trade on the FTSE at the minute. The DAX, though, that might be all right now. Let's have a look. Not quite. So, although this looks like quite a big move, but look at the volume this morning. Nothing there, is there? So, yeah, though this looks like a big move, it's actually not compared to what we've been used to over the last few days. So, if it drops a little bit further, I'll get a 15-minute, but might have to wait for the 30s to go in today. So, no range again there. It's not far off. So a little push down, and I'll be taking a 15-minute break there. And the same with the FTSE. So if we break out of this 10-minute range in the next 5 minutes, I'll be trading. Otherwise, I'm going to wait around for the 30-minute. Right, so that's the news this week. There's lots of it. So obviously we need to be prepared for that. Just looking at forex side of things. No ADRs so far today. Just to remind myself what I've got set up at the minute. I think I've got 3, yeah. So that's the ADR 3 I'm running at the moment there. I think I'm running the 3 on the indicator as well. Let me just check. Yeah. Okay, so where we are now, from an ADR perspective, if you look at obviously what we've had, so this is the announcements of the tariffs and everything kicking in. Okay, so that's 1, 2, 3, 4, 5, 6, 7 days now. So we've got 7 days in total of chaos after that initial announcement there. So using an ADR3, obviously what I'm doing at the moment is looking at the very short-term interaction or distances that price is moving. You can go back now, I think, to an ADR10 quite safely, because you're taking into account all of this volatility and a few days of not an awful lot. So it's going to give you a pretty good mean of an average of what's going on with the daily ranges now. So if you want to stay on a 3 or a 5, it's not really an issue because you're going to be monitoring the high volatility. But if you're using a 10, it's not going to make a massive difference now because we are nearly 10 days on from all the chaos. So I'm sticking with 3 for the minute because I'm still not sure what we're going to do. Friday, as you can see, was the first real quietish day we've had for a while. If you look at most of the FX pairs, those are still moving quite hard. So, you know, from an ADR perspective on FX, I think keeping with the last 3 days, because there's still a lot of volatility coming in, is probably a good thing to do. We've got quite a lot of volume news coming in this week as well. So, but yeah, so that's basically, you can see we've still got some big ranges going in at the moment. So ADR3 or ADR5 is going to give you a sort of more accurate levels on your ADR of what we're actually doing at the moment. So, you know, if you look at using a longer term ADR, like an ADR20 or an ADR30, you'll find you hit those ADR levels literally within a session very easily. So I'm sticking with the ADR3s at the minute. As you can see, there is no hits today. It's Monday. So this is all reset, which is lovely. So we can now see really what is going on with these AWRs as well. Now, AWR have left the same. I'm using 10 weeks worth of AWR data, which is 3 months. So I'm using the quarterly ranges on average. So if we go back to a little bit more normality this week, these should be fairly reliable. These will probably not get hit at all. So if we're using ADR3, which was measuring these massive moves, and now we start going back to normal ranges, we're not going to get an ADR hit all week, are we? Weeklies, we will probably hit. Monthlies, waste of time this month. Yeah, so we'll see what happens, but there's nothing to look at there today at the moment. On the ADR, on the RSIs, we've got some big movements on the New Zealand dollar, US dollar still. So the commodity markets, as we know, got really affected. They sold off really badly. So the Aussie, New Zealand and CAD all got hit. That all got undone last week. Literally within 48 hours, we pretty much 72 hours, pretty much undone the whole lot, V-shaped recovery. And that was as obviously all the announcements of the tariffs being paused. So basically it's the buy the rumor, sell the news type thing. You know, oh my God, it's the same as the Liz Truss thing. This is almost identical to what happened with Liz Truss. We're going to change the way that we do everything in the UK. What do you mean? Have you not thought how this is going to affect the economy? Collapse. Bank of England, bailout. Yeah. Trump, I'm changing the way that the entire economics of the world works. Actually, no, I won't. And that's basically where we are at the moment. What next? So we've kind of reset on a lot of stuff. US dollar, not resetting, obviously, because he's screwed them. Yeah. Make America poor again. Well done. Yen still quite strong. Swiss still quite strong. The safe havens are still loaded. No reason to unload at the moment, because at the moment that fear and greed index is still way down in the 10s and 12s. Markets not got any confidence in anything at the minute. But we did get that bounce back started last week. So it's a case of this week again, could go absolutely either way at the moment. So it's just a case of sitting and watching and going with the flow. If the market starts to take off, I'm going to take off with it. I'm still trading breakouts at the moment, and I'm just going to go where the market decides to go. So we've got a gap down opportunity at the moment on the US indices. I wouldn't necessarily play gap with any confidence at the moment, but normally they will get filled. So are we back to a normal market, or are we still in utter chaos? That's the question. And there's no way you're going to answer that until the week's played out. So US dollar is the main RSI extension at the moment, absolutely hammered. Now, he has undone those tariffs, but what did the market do on Friday? Ignore that and go, yeah, right, I'm not interested, dollar. Sorry. So the market is not interested in the US dollar. There is no faith in buying the US dollar at the moment. The US has been hit hard. Every country on the planet right now is buying everything but American. Yeah, your economy is buggered. Yeah, Tesla, still not buying them. Yeah, I went out, I drove around quite a lot this weekend. I was out and about a lot. And it's amazing how many BYDs I saw on the road. Yeah, normally you see Teslas everywhere. Yeah, I'm seeing a lot of BYDs at the minute. And it's the last 3 months where Tesla's started to sort of lose a little bit of traction. Obviously, it's collapsed in the last month. But I'm seeing an awful lot more electric cars that are not Teslas on the road at the moment. Yeah, people are boycotting them. There was a guy who drove along in a Model X, and he had all sorts of crap written through his car. It was dirty at the moment. Obviously, in the UK, we've got like a load of dust around because it's starting to get warm again, so the cars get filthy constantly. His car had all sorts of things drawn in the dirt on his Tesla. People are not liking it. So, that's just one example, but there are an awful lot of other American imports, if you like, that in the UK I know we're avoiding. I went down the wine aisle in the supermarket. There was a lot of wine missing from Europe. The Americas section was full. No one's buying American wine. Yeah, it's going to really hurt. He doesn't realize how much he's hurt himself. But so that dollar still coming down. So mean reverting the dollar at the moment, I mean, it's always a 50-50, but I think it's very risky. He's got to say something pretty damn confident, and the old thank you, sorry, wouldn't go amiss, Trump, but to get the world back interested in the US dollar again. So these are big extensions we've got at the moment. Normally you'd be looking at these thinking, yeah, I really, really like these as mean reversion opportunities. That extended, that movement, not really sure at the moment though. So again, I'm still not position trading at the minute. I'm going to give it this week. I've got over the Easter holidays, basically, I'm going to reassess what I'm going to do with position trading moving forward. I'm still going to do it because it's my bread and butter. But right now, while this is all going on, I think it's best just to sit and wait for things to stabilize and then get back into it as we get a bit of normal price action. Price action is abnormal at the minute. So it's either a case of you get back in and widen the distance between the trades or drop the risk dramatically. For me personally, I don't see the point in doing that. I'd rather just put my efforts into ORB and breakouts at the minute because that is what's making money. Reducing risk and tying capital up in something that's not going to generate as much return, probably not the best thing to do, is it? So there's all those extensions there. New Zealand dollar CAD is also extended. Again, that's the New Zealand commodity markets rallying back again, which is good. And the Aussie will be doing the same thing against the US dollar. So we've got very strong Australian dollar, very weak US dollar, V-shaped recovery. Yeah, so it's just undoing the commodity moves that we've had. We've also got Euro US dollar, which is extended on the hourly. Sorry, that on the 4 hourly. It's come out of extension now, isn't it? So it's still extended above the 70 level, but again, it could easily do that. But it could easily just do that. He's only got to open his mouth once more, hasn't he? And we'll be back in trouble. Okay, so no 15-minute range break on the FTSE today. That range is under 20% of the daily range, so we've not got enough movement today. Well, I think I've actually got that set to 15 at the minute. Yeah, 15. So we're under 15% of the daily range. There's no volume today there. DAX have got a trade set up, so I'll be taking a 15-minute ORB if it goes. But I mean, there's just no volume today, is there? So very, very, very quiet, ticking very, very slowly. So we might get one of those grindy days. But direction-wise, we'll have to wait and see. Let me just catch up on the chat. Normally, are you leaving longs on chart if market breaks short? What, on the OLB? Yeah. Yeah. That's what it does. It doesn't remove the opposite side. If you look at the moves on the DAX on Friday, no, sorry. Well, the DAX was a clean break on Friday, so that was just a nice, easy profit. But if you look at the NASDAQ from Friday, yeah. So there's your open on Friday. Yeah, we broke to the downside, and then that stopped out. That was the 5, 10, or 15, or 30, whichever it was, ORB on Friday long. Yeah, market couldn't break short. So if it can't break short, what's it going to try and do? Break long. Yeah, so you leave that in place. If your short fails, leave the long in place, and then I took the long. And the long turned out as a profit, and exactly the same on the S&P. The Dow. Yeah, so there's your Dow break short. Failed, long, TP1, and exited end of day. Yeah. So this is the whole point. This initial TPO, time price opportunity, which is the first 30 minutes of trading in futures, that is sort of equivalent to the initial balance, if you like. Some people use the hourly initial balance. Some people use the 30-minute TPO. Some people use, like I do, the ORB, the 5, 10, 15-minute breaks. Depends how quick, but they're all the same principle. It's either going to go or it's not. If it can't go that way, yeah, it will try and go the other way most of the time. Yeah, so one of two things happens on an open. We either have a reason to go somewhere and we go, or we don't have a reason to go somewhere and we try and go there, find out we can't, and if we can't go that way, they will try and go the other way. If they can't go that way either, we get what's called balance, equilibrium, rotation. Those days are no good. You stop out and you lose. Yeah. So there's only really three patterns that are formed at the open. That, which is a P shape, or that, which is a B shape. So a B shape is a down day. A P shape is an up day. A D shape is a rotation day. So what we're doing at the open with the ORB strategy is saying, right, we clean break and we're going for a B today, I'll go with that. If the B doesn't work, I'll go for the P. If the P doesn't work, we're going to go for a D and I'm going to lose. That's the open. There's only three things that are going to happen. Either goes sideways today or it closes up or down. We just get whichever it goes. If it goes down first in our direction, super happy days. If it goes down and that doesn't work out, we try and go long. If it goes long, happy days. If it doesn't do either of them, those are the days that turn into that. As you can see, the vast majority of breaks happen because the market has a requirement to fulfill orders in a direction. There's a bias. For example, the NASDAQ today, I would assume, rightly or wrongly, that the NASDAQ today will go long at the open because all the stocks in the NASDAQ are tech stocks, and tech is all based on chips, and chips all got smashed last week because the China tariffs. Chips have become exempt from the China tariffs. So what do you expect these stocks to do? Bounce straight back, i.e. NASDAQ should break long today. Now, if they have a crack at a short first and it doesn't work out, I'm going to be long. So I don't want to remove the opposite order. If you have a clean break, however, to the downside, for example, didn't want to do that. If you have a clean break to the downside, for example, today, yeah, and it breaks down, we hit target, we get a break even stop on and it comes back to here, I will potentially cancel that pending off, because I don't want to run the risk of taking a long and that making a loss, because I've already banked my money today. But that's personal preference. Which is the right thing to do each day depends how it breaks. For me, if it breaks really hard and fast and it gets all the way down here, that order is just not going to trigger, because it's got to really push the other way to even trigger that order. If it's one of those days where it kind of does this and it sits around and you hit target, and then by the time the open comes in New York, you're back up here, I would be considering taking that off. Or I might leave it on, because if New York opens and it breaks long, we want to be on it. But there is no right or wrong. Every day is different. You don't know what it's going to do. So, you know, it's one of those, this is why I say there is no right or wrong set file. There is no right or wrong way to trade the strategy. There is nothing right or wrong about anything. It will either do something or it won't. And your decision is whether I want it or not. At the moment, I'm going to take a short or a long. If they both fail today, that's my decision made for me, isn't it? But if it breaks long, it gets to a target and then it pulls back and breaks even, and it's sitting back inside that inside range by 2:30 this afternoon, I might decide to take it off. Depends how my morning's gone. If I bank $2,000 this morning, I'd be stupid to jeopardize that by taking a trade that may fail in the opposite direction. You know, it is what it is every day, and there's no way to make the right decision every day, because it's random, isn't it? He said, time to buy. It's our problem. We didn't listen. Yeah. Yeah, but you wouldn't expect him to openly come out and say, I'm insider trading, would you? This is the thing, isn't it? He said, now is a good time to buy. And everyone went, yeah, because it's dropped, you idiot. Because you've made it drop. Now, if he'd have come out and said, now is a good time to buy because I'm going to be removing the tariffs, we'd have all bought it. But who'd have thought he would do a complete U-turn on what he said he would not do a U-turn on, i.e. lie again? The guy is just a criminal liar, basically. So it's the biggest, obvious insider trading job I've ever seen in trading. I've been doing this a long time. I've never seen anything like it. Blatant. To stand in the White House and tell everybody on television that this guy made 900 million, this guy made 650 million, this guy made da-da-da-da-da-da by insider trading. He didn't say the word, but he dumped the stock market, said he didn't dump the stock market, told everybody to buy, and pumped the stock market. Doesn't get any more cut and dry, does it? But anyway, next time he says that, he won't do it. And everybody will buy it, and they'll all get absolutely burnt to a crisp, won't they? Morning, Andrew, Georges, Noob, David, how are we doing? The DAX stopped before putting a sell on the pit at the lower range, otherwise would have been stopped out. You've obviously got different setup or different data to me this morning. Mine's not. Mine's just sitting there waiting at the minute. Morning, Timber. Mumo, MT5 is nuts. Didn't close my ORB, NAS, S&P longs on Friday. Gapped up. Happy accident. Very good. Check your closing dates, basic closing times in the inputs, and check your broker time. So basically the session end is when all pendings are deleted and all candles, all orders are closed. Make sure that's half an hour before the last candle on your chart. So just go to the last candle on your chart, put your crosshair on. For me, it's 22.55 on the DAX. Different indices have different closes on different brokers as well. Yeah, so some brokers, you'll have the DAX and the FTSE closing at a completely different time to the NASDAQ and the S&P, which will close at a different time to the Dow. So you have to check every instrument individually, but 22.55. So if you close it at 22.30, you're safe. Do not close it at the last candle, because that last candle won't necessarily execute your close. So just double check your charts. But other than that, I mean, that's literally all it does. There's a line in the EA that says, at this time, do this. If you don't get that time, it can't do that. But it's a good job it broke up, isn't it? Morning, Duncan. Once your reputation has been ruined, you can lie without any inhibitions, as we say here. Yeah. I don't know. I find it unbelievable that they actually voted to put a felon in charge of the country. You know, it's bizarre. Yeah, if you had a mobster, would you vote for him? I suppose they did in Germany, not Germany, in Russia, but I don't know. It's just not the way we work, is it? It's alien to us. Yeah, if we've got like any member of parliament, like say for example Nigel Farage got caught insider trading or had membership to the Nazi Party or something, you know, ridiculous, and had a criminal past, we wouldn't put him in power, would we? We just wouldn't do it. Do you know the film Idio Crazy? No. Never thought that was a documentary. No, I haven't seen that. I watched Black Mirror this weekend. New season. Really good. And it's The Last of Us today. Brilliant. Right. Okay. So let's get on with some analysis. So there's no trades at the moment. We are just sitting around doing absolutely nothing. So we may get a break. We may not. But it's only going to be the DAX. Oh, no, sorry, I've got a break on the 30. There we go. So 30-minute ORB is in already on the FTSE. So did just about scrape the 30-minute ORB. There you go. So long FTSE. See if it goes anywhere. But it's not really looking particularly exciting today, is it? It might be one of those days where we've got to wait for the New York session to actually do something. I mean, upside on this is a bit tricky as well. I might move my target down to 1R today, just because we haven't got a lot of volume. It makes sense to try and, if we're going to get there and it is going to reverse from there, it makes sense just to get out of some of it there, doesn't it, today? No volume, so we need something to shake the market up. And unfortunately today, we've got nothing. There's no news. So there's absolutely nothing really to drive this at the minute. All over the place. Still, look on the currency strength chart. It hasn't got a clue, is it, what's to do? Utter chaos. Anyway, right, so FX. We're going to go whiz through the FX pairs and just have a look at what everything's done in the last week. So I'm going to go to an hourly chart and just sort of look at the last couple of weeks worth of price action. So that is 2 weeks ago. That is 3 weeks ago. So we'll see basically, and obviously that is last week. So we'll see what everything's up to at the minute. See if there's any good support resistance areas coming in to play potentially. But at the minute, as I say, it's all about Trump. It's all about waiting to see what he does and what he says next. You can't forecast or predict anything. And the best thing to do at the minute is just to go with the flow. If something is rallying, go with it. Just take the breaks, because at the moment, that's what the market is doing. It's putting in big, supersized ADR days. And if you can get on it at any point, hold it and just get out at some point after you've made some money. But in and out as fast as you can as well at the minute, or protect your risk as fast as you can. Yeah, there's nothing wrong with having a runner. But make sure you're not going to take a loss on it, because as we know, one candlestick at the moment on an hourly time frame is equivalent to 1 or 2 ADR that we've been used to in the past. So you need to get that capital protected, because you'll get stopped out very quick and easily. And the speed that this thing's moving on lower time frames, you just may not get honored on your stop losses. So there's a lot of slippage around at the moment. I've noticed quite a lot of slippage in some of my trades where they've been stopped out on spikes. You're not going to get the price you want. Brokers aren't honoring stuff, and brokers are really spreading the market at the moment as well. They're making a lot of money. There's a lot of people still putting stops above and below the highs, and they are just spreading the crap out of it, taking people out all the time. But that's what they do. That's their job. Their job is to take your money. So, you know, they're doing very well at it, from what I hear, what I've seen. Right. So just starting off with the Aussies. So as you can see, so commodities markets got really hit. Basically straight down on the Australian dollar and the New Zealand dollar. We had a lot of volatility over the last week. As you can see with the Aussie dollar CAD, we didn't really go anywhere with this one. It is all starting to recover. If nothing is said this week, I think there's a very good chance that we will just come and return to the origin of the move and basically undo it. So it'll be a 2-week undoing of the move. But there is a chance that this could be the new norm. As I say, we just don't know. It's such a volatile market at the moment. The best thing to do is just to get on a breakout and hold it and see. It's very easy to make an awful lot of money on a move. But to time the move, virtually impossible. So at the minute, as you can see, the Aussie CAD, there's a good chance that we may well come back up into here. We sat around for 2 days basically after that, and the market is holding this level. So that's your downside support. Upside, you're looking at coming all the way back up here. So it's broken long this morning. Again, just kind of go with the flow with it, I would. Dropping down onto the 15-minute and the 5-minute time frames and just taking reversal alerts in line with current trend, not a bad idea at all. Even if the first one doesn't work, the second or the third will, and they will get you way more than a 3R at the moment if the market's going to continue to do what it's doing. So reversal alert indicator really useful at the minute for just going in line with trend. If you're using the market reversal alerts EA or any EA on MT4, you can just basically go into your common settings and set it to short only or long only. And, you know, if you're in an uptrend, just say, get me into reversal alerts long. Position trader EA will do that as well. Obviously, that's got the ability to use stop losses now as well, and reversal alerts are all built into the position trader EA as well as the market reversal alerts EA. So, you know, that isn't a bad idea at the minute, just taking those trades. You're going to find that a lot of the time these will be accumulation breaks. So they are actually breakouts rather than reversals. So, yeah, long in line with current direction, basically, from low time frames. ADRs and RSIs, not quite as good at the moment because these numbers are obviously all over the place at the moment. So you kind of almost have to adjust your ADR on a daily basis and eyeball what it's been doing. So at the moment, using an ADR 3, you've got 2 sideways days with 1 massive day. If you're using an ADR 5, you've got 2 massive days, 1 medium day and 2 small days. So, you know, you're going to get different readings, but they're roughly going to be in the same place. Should be. But if we're going to go back to normal price action, you're not going to hit these for weeks. So, you know, it's very, very difficult to use any indicators at the moment that are based on any mathematical calculation, moving averages, Bollinger Bands, RSIs, MACDs, ADR. It's all over the place, isn't it? So it will normalize. If this week goes back to fairly normal, I think we can start getting back into things again. But, you know, it depends if he's going to say anything to upset everybody again. But, yeah, so either directional on this. At the moment, it's breaking long. So I'll be looking at sort of 125 ADR to the upside. Downside would still be looking to buy anywhere in this propulsion area here. So reversal alerts down there going for longs. Assuming that we're going to carry on as normal. Bear in mind, we've got Canadian news this week. So on Wednesday, we've got the CAD rate announcement, 2.75%, not expected to change. That doesn't mean the CAD won't move on it, though. So if we can, this is the sort of trade I would say get into and get out of by Wednesday afternoon, and try and ride it basically until the news comes out. Swiss franc at the moment, anything against the Swiss franc, it's obviously a safe haven. It's proved itself to be a safe haven again. The Swiss interest inflation figures dropped again, which means they are going to drop that interest rate again, which is going to bring the Swiss interest rate basically to 0. So we are currently at 0.25. First time ever in my career trading, I have seen the Japanese interest rate higher than anybody else's. That's never happened because the Japanese have for 20 years run negative interest rates. They're not anymore. They need to get rid of that little thing there. But yeah, 0.5. So the Swissy, they said negative interest rates are not off the table. However, zero interest rates, probably very highly likely. So Swiss franc should be weakening. However, because it's a safe haven and it has low interest rates and it's said it's going to drop interest rates even lower, it becomes even more of a safe haven in times of trouble. So as long as we have this disruption, you're going to get probably better returns on shorts against the Swiss franc than you are longs. If we are coming out of this fear at the moment and going back into sort of more normalization, this will all undo. So again, very hard to tell whether or not the Swiss is going to power up or drop, because if Trump suddenly comes out and says, right, China, 250% tariffs, you'll be down here, because they will liquidate more US dollar and turn it into safe haven. So again, hard to tell. At the minute, if things are going to stay unsettled, I would say, you're probably going to sit range bound, aren't you? So watch range highs of last week and range lows. So that's last week's low and last week's high. That's Friday's low down here. You've got this propulsion area to the upside as a potential short as well. So if we're going to stay range bound, because there's no reason for anything to really move on the Aussie at the moment, those are the kind of the plays you want to be looking at in the minute. Obviously, RSIs are all standardized back in the middle. So you're not going to do anything with RSI extensions necessarily at the moment. Same with the yen. Safe haven. Again, yen proving itself. It is still a safe haven. Low interest rates. That's where you want to put your money when you've got times of uncertainty. That's the big undoing that we had of the tariffs. The market seems to be supporting that at the moment. But again, still not confident, is it? So last week's high is a good reaction point. Other than that, we're probably coming back to the origin of the move, which is about ADR. So again, really difficult today for direction. We got no news catalysts. We got two big interest rate announcements and CPI announcements this week. So, you know, it could go absolutely anywhere, couldn't it? Aussie, New Zealand, both commodity pairs. So we got a lot of sideways movement last week because they're both weakened dramatically. Aussie, interestingly, lost out against New Zealand, which is unusual. So again, watch this low and back up into this previous support, which turned into resistance. So that monthly level, last week's high, 120 ADR roughly. Lovely short opportunity, longs down there, but direction wise could go either way. We've had a reversal on the hourly. Does look like we might be reversing to just try and have a go at a long up into there. So that looks like a pretty good opportunity for a long at the moment, Aussie, New Zealand. You've got an RSI extension, which is working at the moment. So, yeah, longs on that one by the looks of things. Aussie US, completely undone. So commodities just undid this at the minute. The US dollar did not strengthen up with the commodities. So therefore, we just get a reversal. So you've got the commodity markets getting destroyed, the US dollar being weak, and then you've got the US dollar still being weak while the commodities recover. So you're back to where you started. We may well go into normal price action here, but obviously that US dollars can do anything it likes, can't it? So for me, I would say I'd be much more interested in longing this than shorting it, because I don't think the US dollar is going to particularly recover easily from this. But where do you get in? I mean, the next pullback into propulsion is all the way down there. You've got a little propulsion gap here. You could use a fib on that, 50, 38. It's very, very, very difficult to get into a long on this. You've missed it. The reversal was all the way down there, that off that whacking great hammer look. But, you know, even if you took that, you wouldn't have taken that because of what was going on with tariffs. This is because it was all undone. You couldn't foresee that. Well, you could, because he told you, didn't he? He said now's a good time to buy. But anyway, if you listen to him, well done. If you didn't listen to him, like 90% of the population, because they hadn't got a clue what he was up to, you couldn't have got it. So it's extended to the upside. Don't really want to be going against the trend on this one. I don't want to be trying to buy the dollar at the minute, but we'll see. Today, the stock markets may well rally and they may well restart a new recovery. And this week could be one of those grindy weeks. We get no news from Trump because he's just concentrating on China, and we just start to grind back up again. So long on the FTSE, not really doing a lot. Just gone long on the DAX at the 30-minute ORB. There's just no volume today. Might be a rotation this morning, but we'll see. We'll see where we go. Swiss, same story. Swiss franc, obviously, very, very strong. That was an unusual move. We basically undid the tariffs, and then they rebought the Swissy. So, yeah, stuck down there at the moment. I'd be looking for shorts on this. Canadian weakening still. Swiss franc potentially strengthening on any news that comes out of Trump's mouth. So you could try and take a flag break short out of that propulsion gap. These are going to be 61.8, 71.9 retracements up into these propulsion gaps here. So shorts, but I'd want it to pull back before I got interested in one. So propulsion gap targets to the upside, also ADR. Yeah, looking for it to put in a lower high and continue on its way down. But this is all assumptions that we are still going to be in fear mode. So it's not a bad idea to watch the fear and greed index every day. If you see it staying down there, that Swiss franc should continue to push. Yeah. CAD yen and Swiss yen, all the yens were very, very strong. Utter mess. Look at it. I mean, what can you do with this? It's range bound, obviously. Lovely double bottom range, lovely double top range. You've got an interim range in the middle as well. So until it says otherwise, just assume that we're going to stay range bound and try and get into some range bound trades on it. That's really all I would look to do on this. So look for reversal alerts at support and resistance, W and M patterns on lower time frames. Yeah, that's obviously not a support, but there's your W pattern there. Yeah, all these, just take this type of price action basically that you see up at highs and lows. Reversal alerts indicator is going to give you a confirmation of when they're in, but sideways, isn't it? Swiss yen, you can see the difference between the safe havens here. Obviously the yen not as good as a safe haven anymore because their interest rates have risen. They're starting to use interest rates and not overseas bond purchases to control their currency. So the Swiss has won out in this case now. So the Swiss is back to its definitely the biggest safe haven out there. Yeah, so pullbacks. Just bear in mind with all of these yens, why have I got my swap filter turned off? So just bear in mind with all these yens, swap are still very expensive if you're looking to short. Yeah, so that's fine to trade because it's not going to cost much money. But I mean, if you're in and out intraday, it doesn't really make any difference anyway. So Swiss yen, yeah, still longs. Obviously, with the recent intervention from Japan, it will continue to power up the yen. However, this is obviously because of what's going on with Trump. So when that calms down, you'll probably see that yen start to power up again and we'll get more movement to the downside. So at the minute, we've broken the most recent resistance. And although it has pulled back from it, it's just not it's not a spot on, is it? So you got resistance there, resistance there, resistance there, and it's kind of turned from there. So yeah, this could be just starting to trickle down. Obviously, if we start to pull money out of the safe haven, it's just going to grind down all week. So does look quite good for shorts, but it also looks very nice for longs and continuations, doesn't it? So if in doubt, stay out. Morning, Trading Hub. Morning, Virginia. I was thinking about cancel the long on the DAX, but we'll see if it can push up a bit. It can't. See what it does? It's not doing anything at the minute. There's no volume today, but low volume markets tend to be grindy. Yeah. So when you've got low volume, what you tend to do is just grind like this for a while, and then it will suddenly go, oh. Yeah. So just go with the grind. But when you've got low volume, I tend to reduce targets because obviously it takes a long time for trades to play out. The longer you're in a trade, the more time there is for something to affect that trade negatively. So if you're grinding, I will try and get out faster or protect the trade faster. Just drag the stop up. For me, on the FTSE, for example, as you saw earlier, I've just reduced target down to resistance. So if you're going to grind on low volume, it means there's not a lot of power. If the sellers here that added into that position have got an iceberg order holding this level of price, your grind is not going to get through that. So get out there. If they're not holding this level anymore, I mean, I don't see any reason why they wouldn't be, to be honest, because it's only a day on from there, and that was where they decided they had no more confidence in buying stocks. There's still no confidence in buying stocks, is there? So I would say probably stay cautious on it. DAX target's fine. There's the same highs on the DAX. So, but you know, to get there, we're talking about hours. At this speed, we're going to be sitting here for hours. So these are the days, you know, this is where your discretion comes into it. These are the days where you look at your P&L, you look at how your week's gone, how your month's going, and you look at your P&L going $150 minus $70, $180, $100, and you see it flip-flop around for 2 hours. These are the days where I just go, screw it, close it, just get out. Because this is not a momentum breakout. This is a momentum breakout strategy. This is not a momentum breakout, is it? So it's dangerous. So I can walk away now and go, screw the morning, let's try the afternoon. Or I can hope. There is a 50-50 probability that it will go up or it won't. Literally, that's what you got to play with, isn't it? So, but your choice. I'm just going to stick with it for a bit, and I'm having an awesome month, so I don't care. If I was having a bad month, I'd be looking at it going, yeah, let's probably just sideline it. Euro odd sideways at the moment. Euro is very confusing to me at the moment. Lagarde is dropping interest rates. Lagarde has said they're going to continue to drop interest rates. We are going to be one drop, one pause, one drop, one pause. That's the plan for quarterly at the moment, which means bearish euro. Obviously, with what's gone on, commodities and everything got destroyed. Euro sat there and went, we come out of this not too bad. And we've got a massive retaliation we can do. The second biggest economy, trade with the US. So they've actually fared pretty well out of this, the euro. Very difficult to read where it's going to go next, though. We've got the interest rate drop coming this week, which means usually what you will find when you've got an interest rate decline coming is the market will factor that in already. So on Thursday, we're dropping the euro rates down to 2.4. Typically, what the market will do 1 to 2 weeks before is start to sell off the euro in preparation for the interest rate drop. Yeah. If the interest rate doesn't drop, we pop. If the interest rate does drop, we have already done the move. Now, the difficulty we've got with what's happened in the last week is the market has not devalued the euro ahead of the interest rate decision. So it may be that we get a fast sell-off this week as they get themselves positioned back to where they were before, obviously, Trump did everything. So I'd be bearish on the euro this week, but it's hard to be bearish on the euro when it's doing so well. But it's doing so well because of fake news basically being produced by the US. So, well, it's not fake news, is it? It's, what is it? What is it? But yeah, so we have hit upside resistance on Euro CAD. There's lovely downside propulsion gap targets. We got all this stuff down here as well from ages ago. So all of these euros are looking over the last week like we couldn't really do much more with them. So if there's not a massive ability to go upside, we will usually try and price discovery to the downside. So they do look like they're shorting as well this morning a little bit. So I'd be more inclined to short than long. This is a short-term breakout buy I've got on, so ignore this. But yeah, as you can see, shorts at the moment on the Euro Swiss, but that's because it's a Swiss safe haven run. It's always everything's going to be short against the Swiss, isn't it? Euro yen, same thing. Yen was powerful. It's held up very, very nicely against it. So it shows you there's quite a lot of power in the euro. Again, swaps on this, way too expensive to hold short for any period of time. So again, at the minute, until the market says otherwise, all these range plays are good. Just look at bouncing off of ranges at the minute, unless there's a really strong directional bias. Euro pound broken down. Euro and pound, obviously very close trade partners, tend to spend most of their time ranging. Yeah, so we spend most of the time in ranges. Yeah, doing that sort of thing. Obviously, that is because the euro got told that it had to do its own defense now, so it had to borrow a load of money, bond purchases, etc. Boosted it, sold a load of euro, made them a load of money. I would expect us to go back to this. So again, euro, beautiful ADR, 127. That's normally around about 30 to 50. So huge ADRs at the moment on this thing. But it will go back to normal. So again, very difficult to call what to do with anything at the minute. But at the moment, I would be bearish. So euro pound, for example, if you look at a 4-hour chart, we got that big extension and then we got a nice profit take. And then we put in a divergence, which is bearish. So this move here that we saw at the tail end of last week could well be the catalyst that starts that to run down. If they're dropping interest rates, we should be bearish on the euro. There's absolutely no reason I can see to be bullish on the pound, though. So, you know, we're stuffed. And if we've got to save our steel in the UK, as we look like we have, someone's got to pay for that. Pound is not going to do well with that bailout that the government is doing on the steel plant. So, yeah, it's so much happening in the world at the minute, isn't it? It's just almost impossible to pick a bias on anything. Euro New Zealand, again, starting to come down. So there's the undoing. There's the ads in propulsion. So I would say, you know, easily we should get down to ADR this week. Euro US dollar, same thing. But that US dollar is really weak. It's going to take a very weak euro to not do well against the US at the minute, isn't it? So more range bound on that. I would look to sell the highs if we did get up there, but I'd be wary about trying to long it. That US dollar, I can't see having any strength at the minute. All the pound pairs, very, very sideways at the moment. They came out of it the pound came out very unscathed through everything because we only got 10% tariffs. So as you can see, there's not a lot of movement on the pound. It's obviously devalued against the Swissy and the yen because of the safe haven runs. But there's no real reason to be bullish or bearish on the pound at the moment. So range bound and do the opposite to what the other currency is doing. So if the commodities are getting hammered, obviously going to do that. You're not going to know it. But commodities at the moment starting to recover. So again, I would be less inclined to try and long this. but it's really difficult to ignore these massive propulsion gap targets. Yeah, that's what they do. They get filled. So whether we get up there or not, I don't know. But I certainly think at some point we could test that this week. But it's going to take the New Zealand dollar to weaken. We have got news coming up on the New Zealand dollar. We've got the CPI on Wednesday, so that could unwind that New Zealand dollar. Stuck today, innit? So yeah, all the pound pairs. So the pound US dollar obviously completely undone again. Nonsense. What a waste of a week. Anyway, so yeah, lovely resistance coming up on the pound US dollar at the moment, but shorting that means strong US dollar. Really not interested. I'd much rather have this pull back and try and long it. So the best thing for me at the moment would be for this to kind of get back into here and then drop down lower time frame and wait for a reversal out of that, which would be sort of a 38 retracement long. I think that's more likely to happen, but you know, wait and see what Trump does and says next. It's all that's going to affect the market. New Zealand dollar CAD. So again, New Zealand dollar all rallying back up. Very, very strong end of the week for the New Zealand dollar, or didn't do quite well against the Swiss, obviously, because they still bought the safe havens. So this move here you saw on Thursday is kind of still the market scared to death. Yeah, so they're still sticking money back in the safe haven. Nobody wants to hold anything over a weekend that is risky at the moment because you can't react at the weekend. And what you've got is days worth of analysis that can happen over the weekend, which can make your position worse. So there's a lot of safe haven runs. So buying the Swiss franc Thursdays, Fridays at the moment, probably not a bad thing to do because people are going to be liquidating risky assets they've tried to trade over the week and putting it into the safe havens at the weekends. So, but yeah, New Zealand should recover this week. It's recovering well against the yen. So again, pushing up into resistance. This propulsion gap is kind of the last stand at the moment. New Zealand dollar, US dollar, way out the highs. You know, the US dollar, everything's going to kill the US dollar at the minute. Yeah, so you got something that basically has been rallying like a crazy thing for 3 days against something that's been dropping for 3 days. You're going to get a big move like that. So trying to get in on that, virtually impossible. It's one of those where it gets so extended, you think, even if it gets back to there, you're like, oh, it's too early. Yeah, even that, too early. But yeah, unlikely, isn't it? But you never know. Trump, look what he did last time. 24 hours. Yeah, 24 hours. Could happen. So yeah, very, very difficult to call anything at the minute. And all the US dollar pairs obviously down. There is a good probability we might see some kind of mean reversion attempt on them this week. They do seem to be holding, but let's see how today plays out with no news. If we sit around sideways, I would say probably we are going to try and mean revert at some point this week. If it starts to push back down again, I would say probably not. So all of these US at the minute, if you think we're going to go for a mean reversion attempt this week, you want to be buying it now and getting out sort of midweek by the time we get the Canadian interest rates and the European interest rates coming out. But as you can see this morning, US dollar coming down against the CAD again, the euro pushing against the dollar again, the pound pushing against the dollar again. The dollar is dead at the minute. Yeah, there's absolutely no faith in buying this US dollar. So when you're looking at things like the US dollar CAD and the US dollar Swiss, very hard to press the buy button on it at the moment. But it's also very hard to press the sell button because we've already gone, you've missed it. And adding into a position when it's this far down is the opposite of what we usually want to do, isn't it? So very tricky times to trade at the minute. So this is why I'm down here on low time frames, and I'm literally just getting in and out on scalp on small time frames. You know, risk reward is your friend. I never thought I'd be saying that, but at the minute, just getting in and using a standard risk reward is the best thing to do. Just get on any moves that start and assume they're just going to continue going. Yeah, that's the best way to play. right now, because all we're doing at the minute is fast, scared reactions to everything that anybody says anywhere, which causes big, swift movement. So it's just trying to be in the market when the moves happen. And if they go your way, you're going to kill it. If they go against you, control the risk. That's all you've got to do. But volatile, this is how you trade volatility. Volatile markets, you just go with the flow. Morning, Josh. Morning, Harold. How are we all doing? Either stuck or it's going mental, isn't it? At the minute, this is literally what we have. There's no sort of in between. There's off and on. That's it. We're either going or we're sitting around waiting to go. Just a difficult thing to trade at the minute. Anybody got any other pairs or anything else they want to discuss specifically? Gold at the moment, obviously off the charts. US dollar collapsing, safe haven gold. Although since the Ukraine war kicked off, much less of a safe haven. Unfortunately, Russia have a very, very large stock holding of gold, which means that the gold price has been kind of strangulated since the Ukraine war, because you can't import or export gold to Russia. So it's become kind of an inverse US dollar index, really, gold. But obviously US dollar collapsing. So no reason why it shouldn't continue to do exactly what it's doing at the moment, going up. Oil came down, crashing down last week. It did recover on the bounce. So the moment we're still sitting around waiting to see what happens. This is really hard to trade, this type of dead cat bounce move, because when you get this, it's usually a profit take, and it's usually the start of a continuation. This isn't a profit take. This is an undoing of the previous move. But look how small it is compared to the move. You know, it's below $60 a barrel. It's hard for oil to trade. So if you go back and look at price action on oil, yeah, $60 is this orange line. Yeah, it's really hard for oil to trade below $60 because of the profitability of oil production at below $60 is hard. Yeah, this is why we have this kind of floor. It has done it, and it does do it. We go back, yeah. It can, but look, this is kind of the floor, if you like. That's a collapse. That's 2020. That's COVID. So if you take the COVID collapse out of the equation, and obviously then it recovered back to the normal prices, and then Ukraine war kicked off. But you know, $50 to $60 a barrel is the floor. If you look at the cost of extracting oil, it doesn't make sense to do it below $60 a barrel. So we are at the absolute floor, which is where you start to talk about recessionary prices. Look at COVID. Yeah, we went into recession. That you can get below 60. For us to get down here is quite catastrophic. Every bone in my body is saying buy this thing back up to 125 a barrel. Last year we were forecasting what did we forecast last year? 105, 115? Can't remember. Somewhere around here, Goldman Sachs were forecasting this. Yeah, look at where we are. It's just very, very difficult to try and do anything but that at the moment with things like oil. Same with the stock market. Yeah, it's engineered and manufactured to go up, but why would you want to buy any US stocks at the minute? They're all getting killed. You know, so it's. I think you're more likely to base. I think the play on oil at the moment, short term is just to buy every bullish reversal. Yeah. They've got a lot more chance, I think, of working out because the market can't sustain too much more downside. Yeah. It was struggling down here, really struggling. So I think you're better off if it pulls down, take reversal alerts long and assume that we're just going to stay range bound. And if we stay range bound, you just buy the lows all the time. The logical thing to do at the minute. And obviously, you know, it should be able to find its way back, but this is what Trump did. Yeah. You know, this is the thing that is absolutely crazy. He wants to make America great again. Yeah. They're a massive oil producer and exporter. You don't make America great by destroying the biggest export you've got. And Canada, yeah? Energy, oil, it's just every single thing he did when he came in was detrimental to the US economy. And yes, the whole sticking plaster, like ripping it off, is going to be painful for a bit, but it will be better eventually, makes sense. But this is not a plaster. This is opening the wound up, rubbing salt into it. You know, it's just totally opposite. So the thing I think that investors have done now is they've changed their infrastructure, if you like. They've changed their perspective on how safe US stocks are and the US economy is for investment, because you've got someone in charge of it that is willing to take risks which are beyond anything we've ever had before. Yeah, to destroy your economic trading. It's like a business. You have a new managing director come into a business that is struggling and basically go, right, drop the sales price of all of your products down and make 5% margin on everything. Everyone in the company will be going, but you're not going to be able to pay our salaries. Everybody knows that, but the director, he doesn't care. Yeah, because he's a multi-millionaire. Doesn't give a monkeys. If the business goes, well, let's buy another one. That's what you've got in charge at the moment. And businesses, I think, are seeing that now and going, right, well, stock market, no. Oil, no. We're not going to invest in those anymore. We're going to put it into different assets. Where's the biggest economy at the moment that's growing? China. Yeah. If they are going to fight with them, who do you think we're going to side with? The party that's going to win. They're bigger. And if you want to fight them, they've got a bigger military than you as well. Probably not a good idea, Trump, is it, to pick a fight with the big boy? It's like you're walking into the playground and you're picking the biggest guy, and that's the one you're going to punch. If you can reach him. He's trying to reach him, and I don't think he's got a chance. He doesn't know what he's done. So that is a possibility. That, I think, is more likely. But you know, you can't really look at anything at the moment and really know what to do with it, because when you're used to this and suddenly now you're trading this, yeah, it's just noise. We're trading noise at the moment. So, you know, you can't see the wood for the trees with anything at the moment. It's just a case of get in, hold on tight. But you know, the logic of how markets work would indicate that that is the more likely thing to do. Just because it's the same with China, with Japan. Yeah. Remember I said about the intervention, and I explained why the intervention happened. The reason the intervention happened was because the Japanese economy cannot operate at $160. So they have to remove that. It's a barrier. If I'm in Japan and I manufacture and export something to the US, if the US is 160 against the yen, I am actually going to ship it for a loss. I can't do it. Therefore, my company, Japan, cannot operate. So the company has to do something drastic. It sells all its shares in the other company, which is the US in this case, and liquidates all its US assets and turns them into yen. Yeah. Oil is the same. The oil producers are sitting down there at $50 to $60 a barrel going, well, we're going to turn the pumps off in a minute because it's costing us $45 to pump the thing out, put it in a barrel and ship it somewhere. If it gets any lower, we'll just stop pumping until it goes up again. Yeah. When the demand is the same and the supply is reduced, the cost increases. So the oil producing countries like Saudis and that will just go, we'll turn the pumps down. If we make less of it, you're going to pay more for it. That's what will happen to oil. But you've got people like the US at the moment, Trump going, $55 a barrel is fine. Might be for you, but it isn't for everybody else. So when you run out of oil, Trump, everyone will go and buy the other people's oil. The other people's oil is more expensive. But you haven't got enough to produce to supply everybody. It's a supply-demand driven product. All commodities are. So that's where we're going with oil. I mean, you might find there's more downside on it at the moment. Who knows? Who knows anything at the moment? Yeah. But, you know, costs change as well. Supply and demand for oil is changing all the time with new, you know, electricity. We're becoming more sufficient in the UK, for example, supplying our own electricity via wind. So we don't need as much oil. Therefore, it may be that there is a cut in oil production and we just lose some oil providers. And then the price of oil gets less because the demand is less. This could be the start of that. There's a lot of countries, when Ukraine kicked off, turned around and went, do you know what? We're not going to use oil very much anymore because we've just realized how dependent we are on Russia's pipelines. We need to change, and that will devalue the price of oil as well. So much going on. So much going on. Hard to pick it apart. But things don't change overnight. Yeah. So, you know, we can't suddenly go, oh, don't worry, we can trade at $50 a barrel. That's unlikely. So, yeah, up at the moment. Wow, what a mess this is today. Okay, so we are testing highs on the DAX. Big, long, wicky candlesticks. So, you know, do what you will with it today. I'm just going to leave these running. The New York session, I think today is going to be a nice open. We'll find out. I'll be on later to stream the New York Open anyway. I think we get some decent movement on the New York Open because I think that Nasdaq's going to get rebought today. So that will drive these markets as well. But if we do get chopped around today on the European markets, I think probably we'll be having opportunities to make it back this afternoon. So I'm just going to leave these running and see if they can grind up a bit higher. I might check it in an hour, and if there's like $500, I might just grab that. See what happens today. But it's struggling. Right. That's all I've got for you this morning. So we've got a busy week ahead with CPI and interest rates. Obviously, keep your eyes peeled on the Financial Juice feed. That's going to be your first port of call if something moves, as to finding out why it's moved. But at the minute, we've got a lot of like sitting around not knowing what's going to happen next. So when that happens, you tend to find the market will do the same. So, but I'd be more inclined to go the way that we're going at the moment than go against it. All right. So anything you need, let me know. I will be back this afternoon at 2:30. So back on the new schedules for live rooms. So I'll be back this afternoon at 2:30. We'll trade the Dow, NAS, and the S&P and see if anything's happened this morning. But at the minute, it seems not a lot. All right, so have a good day, have a good morning, and I will be back this afternoon. If you're not around this afternoon, I will see you next time. Have a good day.